Yes, the universe is unfolding as it should. Hey, everybody, Courtney Smith here with this week's Wall Street winners. Glad to have you on board, and I'm always glad to read this. It's so, actually, it's not that exciting. All right, but the market's always exciting, so let's take a look. Basically, the one thing I did wrong is I was looking for some type of a little correction here, and we never really got it. Not in any of the three major indices. And in fact, they just did really well by the end of the week. Now, the Dow did have a little bit of a dip, as you can see, but closed strong on the end of the week, as the little green line shows that there's a lot of new buying coming into the market, and the red line shows that selling pressure declined as well. Obviously, a recipe for a bull market. Now, the NASDAQ also had a couple of down days, but really not that much, and just grinded to a higher level. Now, I'm still worried about this. I'm worried that the market's overextended and that we should see, a several-day decline. I mean, no big deal, but we really should do that to release the pressure on the market. Now, one of the interesting things is the seasonality. We keep getting up to that yellow line, and if we can close above the yellow line, then I will turn our seasonality indicator bullish. But for now, we still have to call it neutral. If it breaks above there, if it closes above there, then I'll switch the seasonality indicator to bullish, and that means we'll put on 50 to 100% larger positions because we'll have a massive tailwind behind us, pushing the market higher quicker. Now, the seasonal situation is, in this year, we're supposed to see a little bit of a dip in May. You can see that there, depending on whatever index you're looking at. But then a continued rally up until the highs in July. Now, that's later than normal. Normally, we peak in May, the old saying, sell in May and go away. But this year, because it's a pre-election year, we're looking for seasonality to be strong until we get to July. Now, as I say, I'm looking for a little bit of a dip here. We're in April, and there's not really supposed to be a dip in April, but there's supposed to be one in May. Maybe it'll come at the end of April, a little bit early for that seasonal dip. Then, as you can see, we should chop sideways, maybe slightly lower, but let's call it sideways until October, and then the last 3 months should get into some good seasonal strength again. Now, let's keep going on because, of course, this is the indicator that I think is going to cause a major bear market, maybe in the fourth quarter, maybe in the first quarter next year. We'll fine-tune it when we get there. Now, the yield curve is backing up a little bit. It's going away, but it's still already got to below zero. I think the signal is in. But that doesn't mean that we shouldn't be bullish from now until we get signals that the bear market is upon us. Remember, this is predicting 1 year forward. So that would be spring of next year, something like that, first quarter of next year. But that doesn't mean we can't make a lot of money from now until the end of the year. And in fact, I'm still bullish. Another reason for being bullish is asset allocation. What's happening here is people are taking money out of the bond market and putting it into the stock market. Our stock market risk indicator took a little bit of a breather here, but it's been extraordinarily strong lately, showing that the market is really looking for they're looking for risk. They're looking to take more risk, and that usually means bullish for the stock market. Global shares, they did take a break this week until Friday. Once again, they're starting to get more interesting to me, but I'll stick with the U.S. market for now. Now, bonds, I told you they sold bonds and bought stocks. Here you can see the sell-off occurred largely on Thursday and Friday. With that kind of, double gap down, I would anticipate that bonds will continue to move lower, thus providing support for the stock market because money will go out of bonds and it'll either go into cash or stocks. I think it's going to go into stocks because we're in a bull market in stocks, and people will look at that bull market and say, well, hey, we can't be in bonds. Where can we be? If they're super conservative, they'll go into cash. If they want to take any risk at all, they'll go into stocks. Now, the bond key factors, you'll notice the blue line moved higher. And that's the most important short-term indicator for the bond market. But notice that the chart itself, the black and red lines, they've been climbing now since the beginning of the year, since late last year. And notice that gold has been climbing since August of last year, although it's dipped recently. Now, gold and the CRB are leading indicators of interest rates. So this suggests that we're going to see higher Treasury note yields maybe a couple months down the road. We'll see. I don't think that this is the start of that increase in interest rates. I think it'll still be a couple months down the road. The dollar is incredibly boring to me. We're trading at the same price we were in October, showing that this is basically global economies have converged, global monetary policies have converged, and the strength in the U.S. economy is not showing up as strength in the U.S. dollar, which would normally be the case, but it's not. Now, I'm getting a little bit bearish here on gold. What we have here is what's called a descending triangle, and a descending triangle has a flat bottom and a slanted top. And this should be broken to the downside. Now, the key to knowing whether it's a legitimate chart formation is to look at volume. The problem is that nobody knows what the volume of gold is. But I did look at GLD, which is an ETF that mimics the price of gold, and it shows that there is declining volume as we have moved through the chart. That means this is probably a legitimate descending triangle, which means we should be a seller of gold if it breaks below 1280, 1281-ish, 1282-ish. Somewhere below there, if it closes below that horizontal red line, we should get short gold. Our key indicators, the top one's a little bit bullish, the middle one's a little bit bullish, but the bottom one, which as you can see is the most highly correlated with the price of gold, is decisively bearish. Crude oil continues to do exactly what I've been telling you it will do, which is to grind higher. My objective, around 68 to 70, so we still have another $4 to go on the long side. I hope you're making massive money from this trade idea. And Bitcoin, another place where you should have made a lot of money. We gave you exactly when to sell short. We told you exactly when to buy long. Right now, I would remain long Bitcoin. You can see I put a green arrow showing that the breakout occurred on heavy volume, and that's important. When we see that type of long-term sideways price action and then a breakout on heavy volume, that means the breakout was probably legitimate. Purple Predictor remains very, very bullish. The smart money was able to accumulate large positions during the sideways market, and now they're still acquiring. But, you know, down the road, sometime soon, maybe when we get up around 6,000, we'll start to see more distribution come into the market. But for now, it's all good. Upcoming classes, you have to come to these classes. You can get a full scholarship, which means they would be free. Just send us an email at that email. We've got Stock Financial Freedom Systems in Las Vegas, Los Angeles, and Orlando, which we have not done LA or Orlando in years. And then coming up in the fall, we have a master class. This is going to be the ultimate class for trading stocks. At the same time, we've also got Option Success School. Same deal. If you want to come to it, ask for a scholarship. We'll give it to you. And then we have a master class also coming up in October that I'm awfully, awfully excited about. That is not free. The master classes are not free, but the two other courses are absolutely free. So we'd love to have you at one of our 3 locations. Of course, this is one of the underlying issues. This is one of the underlying foundations of my trading strategy for the next year. Make sure you've got it. And of course, I get lots of great trade ideas from Stock Butler. Why? Because it's all designed around my methodologies. So if you're interested in making money in the stock market, please go to stockbutler.com and check out their special pricing. All right, freebies, that's all for me. Fully paid up members, hang in there just a second.